In the constantly changing world of fundability, the big question is this: how are entrepreneurs and real estate investors like us, ones who want to grow our businesses and who are tired of paying for really expensive alternative lending, how do we tap into the most inexpensive money available and do it without the hassle of typical borrowing? That is the question, and this podcast will give you the answers. Welcome to the Get Fundable podcast with your host, Merrill Chandler.
Welcome, everybody. Merrill Chandler here. I'm ready to talk about another episode of Liars, Cheaters, and Thieves. So you're joining me from the Get Fundable Facebook page. Funding Hackers Unite. Everybody join in. Credit Sense clients, everybody who subscribed to each one of those pages or those groups, I'm telling you, we have got another version of how they're kind of slipping it to us without they're slipping a roofie to us, thinking we're going to be out cold and unconscious. But I'm here to tell you that there is a way to understand how the other players in the funding game work and how they're kind of using our ignorance against us, or they're counting on our ignorance. So we all know Intuit, the accounting software, they purchased Mint a few years ago. Some of us may even use Mint. So this was a notice that that Brad received in some mailings. We subscribe to literally dozens and dozens of groups so that we can stay in touch and in tune with everything that's going on as part of our R&D, right? We want to know what new cutting edge things they're proposing and what they're marketing and how we can keep you educated. Because guys, we all know fundability continues to change. Fundability continues. The rules keep getting augmented. It keeps getting it keeps evolving, and with automatic underwriting software and lenders getting more and more data on how we operate as borrowers, they're going to continue to evolve their game, and we need to know what their playbook is. So this is another example of how that playbook is affecting us. So let's look at what Mint is, because they're selling us in this thing. They're saying, hey, let's take off and kick off 2020 with your new credit score. Well, first of all, if you go to see my score on this, they're going to send you to what? Credit Karma. And they're going to get you to create an account with Credit Karma so that you can see your score. If you already have an account, then it lets you log in. But they want us to go to Credit Karma. And what does Credit Karma do for us? Yeah, a whole lot of nothing. Credit Karma uses a FACO score. The FACO score is any score that is not used by a lender to determine your approval. Credit Karma uses Vantage Score, a score built by the consortium of the three credit bureaus, right? Experian, TransUnion, Equifax. So we're not going to see our score here because we have other things we want to do. But this literally tells us it's one of the offerings. Go see what your score is, and then they log in. And then guess what? Because you go through this portal, they're going to get Mint or Intuit actually gets to make money off of everything you purchase inside of Credit Karma. Any loans you go for or whatever, that's part of the affiliate agreement. So you want to see your score. And notice one of the things that you may not be aware of, but is fascinating to me, that notice they're putting 705. The 705, what does that tell us? Remember, for you boot campers out there, you learned that the average score in America is between 700 and 710, right? For those of you who haven't joined us yet, make sure you check out the boot camp. Go to getfundablebootcamp.com so you can check in all the details about what some of these things mean. But 705, they're making it look average. They're saying, I want to see why I'm so low. That's what they're intuiting. They don't say 760. They don't say 540. They're saying 705, which is right smack dab in the average credit score in America. And they're also saying, let's These are not your numbers. Sign in to see yours, and that's where they're taking it. All right, now let's see what their real offer is here. They're going through the offer, and notice what they're saying. Why are you interested in your credit score? Now, this is already setting you up to get on lists inside of Credit Karma, because this is part of the Credit Karma piece, so that I want to keep my credit safe. Why is that? First, because of all the data breaches, and people are scared and been led to believe that they are that having your information out there in the world actually means you're going to get fraud perpetrated on you. It's not a 1-to-1 ratio. There's the actual number of fraudulent accounts done versus the amount of information that's out there is a very tiny percentage. And go to getfundablepodcast.com and look up the podcast where we talk about that. The boot camp, we actually do exercises in protecting, checklists to protect your identity. But the bottom line is, you want to keep your credit safe, and they've put that at the top because they've been fear mongering again. All right, next, I want to apply for or refinance my mortgage. Now, if you become a Credit Karma member through these links, they get a piece if you do a mortgage through any of the offerings done through Credit Karma. I want to buy or lease a car. So notice your biggest purchases are here. These are all in order for a reason. I want to improve my credit. Now, when they say you want to improve my credit, they're not going to send you to a credit repair outfit. What they're doing is they're triggering you for credit offers that are less than perfect. I want to improve my credit is an admission. Please send me tier 4 junk credit cards and secured credit offers that ruin my credit profile. Again, funding hackers, you know exactly what I'm talking about. Make sure that if you're not a funding hacker yet, join our tribe, join our community, become a funding hacker, go to the boot camp, and that's how you and make sure that you become a member. I want to apply for a credit card, another purchase that's available through referrals at Credit Karma. I want to improve my financial health, right? That could be a number of different things. I want to apply for a personal loan, and I want to get a full credit report, and then put in my reason, and then their AI will do its best possible version of linking you with solutions for whatever language you put in here. They're looking for keywords, but notice they're looking through this entire thing, guys, to make sure that you are outing yourself of what you're looking for, because they want to sell you something, but the less fundable you are, the more any one of those things are going to cost. So we want to make sure that you're fundable first, and then we don't need to go to Credit Karma for these things. When you're fundable, you're going to get top of the line tier 1, tier 2 banks. All the big banks, the credit unions are all going to be begging you to do your mortgage or auto loan and credit card with them. And don't just go out for any old credit card. They're going to send you a list of credit cards that don't necessarily benefit your profile, don't make you more fundable. They're actually going to use credit cards that they make the most money from by referring. And once again, we're in that trap. This is malarkey, guys. This is straight BS. And if you don't know what they're asking and why they're asking, you're going to get hit. And these are landmines. Every single one of these can lead to a landmine that is going to harm your profile. Next, let's take a look. Now let's get to the meat of the matter. In the same email, there's another one. Now, by the way, these orange lines are mine. I put them on here so that you can see, so that we can outline it, right? But notice what it's saying. The next offer, now it looks like it's the same mint, because you're a mint member or you're on their mailing list. It looks like just an innocuous customer service opportunity that they're giving you, right? Hey, check in. But now let's take a look at the next one. So outsmart, what are they saying with outsmart? They're saying you can be smarter than the high interest credit card debt that you have. Really? I'm saying yes to that, but not by doing what they're doing here. They're saying outsmart high interest credit. Well, let's see what that actually means. Notice down here, upgrade. Start the new year off strong by resolving to pay off your credit card debt through upgrade. Now, upgrade is just like Prosper, just like SoFi, just like Marcus, all the fintech companies out there who are using automatic underwriting models and charging higher interest than your standard tier 1 and tier 2. And most, there may be exceptions, but most of these are all tier 4 offers. They're like finance company cards or loans. They're like I call them predatory, but they're subprime. They're not giving you the very best possible rates and terms. So let's look at why we say that. So they're saying outsmart debt. Okay. Outsmart credit card debt. But what do they mean by outsmarting credit card debt? Well, what do they want to do? They want you to get into more debt. They want you to get a loan from them in order to create so that you can pay off your credit cards. Now, I'm not saying that's a bad thing. I'm saying it is a path where landmines are everywhere. Because let's take a look at some of the things that they offer in this. Now, again, the orange lines are mine, and I'm going to try and I'm going to expand this. Hang on just a second. I'm going to blow this up even a little further. There you go. Watch all the way across, guys. We've got it's now monster size. Now, I'm going to read this to you. So they're saying apply. They don't pull hard inquiry unless you're approved, but they will pull a hard inquiry. Let's say your actual minimum payment, payoff time, and payoff cost of a credit card will depend on the account terms and any future activity. So that is how they're saying outsmart credit card debt, because they can't know what your rates and terms are. Now, paying off $10,000 in credit cards at a minimum payment may last literally 23 years, right? The amortization schedules are insane. But what you need to know is that they're saying, I can't know what your credit card debt is. What I can tell you is what you get when you get this loan. So for example, if you receive a $10,000 loan from them, right, from Upgrade, and that could be SoFi, Prosper, Marcus, any one of these instrument guys, they're all the same. You receive a $10,000 loan with a 36-month term. Notice that interest rate, 17.98% interest. Your credit card may only be 18% or 20%. So do the math. I've sent you there a dozen times. You funding hackers have lived there in some of our boot camp calculations. Bankrate.com. Go look up there are loan calculators. Put in the numbers of your credit card, put in these numbers and see how much you're actually saving. But bankrate.com, look up the calculators. All right. Notice 17.98% interest, which includes the actual interest rate is 14.3, but they're charging you 5% on that loan as an origination fee. Now, this origination fee is what they split with Mint or with Intuit. They can get 1.5, 2 points of that 5 points is shared with Mint for you following this link and filling out an application. Now, again, I'm not against any of this. I'm saying walk carefully through the landmine field or the minefield. All right. So now that means you $10,000, but you had a 5%. So you paid $500 up front to do this deal. Those are called points. So you have 5% in points up front. And then so you're only getting $9,500 in your bank account to pay off debt. Credit card debt, presumably. They're not saying you have to pay it off like some mortgages. Oh yeah, we'll do this deal, but you got to, with some of the funds, you got to pay off your credit cards. They're not saying this. They're saying get into more debt, and we hope, or they don't even hope. They're saying you can use it to get out of debt. So remember, what they're marketing, they're not requiring you to pay off any debt. So if you're not disciplined, one of the landmines is if you're not disciplined, you have every opportunity to go spend that $9,500 somewhere else for some other reason. And now you've now got 14% debt, plus you paid $500 up front in order to get this money. Okay. This is really expensive money. 14.3 is basically 5 to 6% less than credit cards. So there's that. But the payment is going to be much higher than your credit cards over the short term, right? So they're saying a monthly payment of $343 and change. So that means that you will pay off that $10,000 debt over 36 months, but it's, can you afford the payment amount? Right now, presumably you can afford to pay the interest rate of your credit card or the minimum payments. And remember, boot campers, this is a public thing, so I'm not going to tell everybody the secret, but boot campers, you remember what we believe about minimum payments, right? Implement that strategy. Remember that strategy. If you don't remember, go back and watch the boot camps so that you can understand what we're doing here. But you know how to treat a minimum payments. They're saying pay $343 up every month for 36 months, and you'll pay off that $10,000 loan, but you only got to pay off $9,500 worth of credit cards debt. Now, the loan, the APR of your loan may be higher or lower than that. And your loan offers may not have multiple term lengths available. They may tell you got to pay this for 3 years, 5 years, 4 years, etc. Actual rate depends on score, credit usage history, loan term, and other factors. Now, remember how many times I've told you, especially boot campers, remember how your FICO score determines rate and terms, and many times loan amounts. It does not give you approvals. Only lender underwriting software gives you approvals, but how much they charge you is factored into that by using your credit score. So here we have an admission that the score actually impacts significantly how much your rate is going to be, and or the terms. Now, so there's no fee penalty for repaying the loan early. Awesome. Now, it says you're going to be you'll get the funds in the mail, but let's go up to our next little section. Whoa, Nelly, we're going offline. All right. The next section is when you check your rate to see what offers you may qualify for, Upgrade performs a soft inquiry on your credit report. That's all fine and good. And depending on your fundability, they're going to check only one. And depending, again, sometimes it's TransUnion. It varies by lender. They're not saying here, but they will check your credit score for a soft inquiry. Then notice once your loan is funded, they go back and put a hard inquiry to make sure they didn't, that there were no problems with that particular loan. Does that make sense? So guys, this entire process is fraught with landmines, and I want to make sure that I've included this in Liars, Cheaters, and Thieves, because they're saying pay off your debt, but they're saying get into more debt, and if you do not go through the stages or the steps that I've shared with you, you got to compare the overall cost of the loan with for short-term and long-term. Some real estate investors, it may be worth to stay in your revolving debt because you've got a flip payout coming out, and you can pay it all off yourself. Some of you may need something like this, and for those of you who are clients, talk to your advisor team, because we can show you really good loans to buy down your credit card debt in order to raise your fundability. The debt shifting strategy, all you funding hackers remember, all my clients, many of you have already implemented it. If you don't know these strategies, guys, go to the boot camp, because there's so many ways in which you can improve your current circumstances by knowing the rules of the funding game and learning how to play like a pro, right? So next, it's not circled, but I do want you to see that advertiser disclosure. First of all, they're saying all of this is an advertisement, even though it looks like a customer service email from Intuit to Intuit's customers and people on their email list. And these are from third-party advertisers. It's not anything that you provide is not part of a loan, nor is it information used for eligibility decisions about you, meaning you being on a mailing list or anything we have about you is not used in the process. You have to go out and fill an application intentionally for you to execute on any of these offers. Okay, now that is it. All right, guys. So let's go back up to the top and close this down. First things first. Remember, you are being marketed to based on their belief that you are not aware, that you are ignorant of the rules of the funding game. And to the degree that you have participated, if you've read my book, you're X fundable. If you've gone to the boot camp, you're 2 or 3X more fundable. If you've listened to all the podcasts, you're 2 or 3 or 4X more fundable. If you're a client, you're 10 to 20X fundable. So no matter what level that you have engaged me, my team, or fundability, remember, they are marketing to you. You want to be off of these email lists. We're only on them for R&D purposes. So thank you, Brad, for hooking us up, because he's on one of these. He sent this one in so that we can stay in tune with the latest and greatest from all the great providers out there, all the other players in the funding game. We want to keep you up to date on everything that's important. So throw your comments in, Get Fundable, Facebook, Funding Hackers, Credit Sense, where my public figure page, wherever you're watching this, make sure that you give a comment. We do our best to get to those every day, and I want to know where you are and what you can do. Remember, if you got $8, go to get my book. I'll cover the cost of the book. Get my book. GetFundableBook.com. Go to the podcast. GetFundablePodcast.com. Go to the boot camp. GetFundableBootCamp.com. Get educated so you can get fundable. I love you guys. Thanks for hanging out with me for a moment, and put out those comments and questions, because we want us to all have the opportunities that we deserve. You guys be well and have a spectacular, spectacular day.
Thank you for listening to the Get Fundable podcast. Please leave comments, because Meryl would love to read about your aha moments from this episode. And be sure to visit getfundable.com to read our blog, get important links, join our community, and much, much more, like ordering Meryl's tell-all book that is changing the world, The New F Word. And you got to tell your friends about this podcast, because we want them to get fundable too.